Procter Gamble has to export some of its key products?
They actually don't have to. They want to. Believe it or not, this company around 10 years ago under its former CEO decided it would stop being so insider and open up to external partners. And we've seen that really accelerate over the past couple of years. And now they're out licensing some of their languishing brands, potential new products, and even products that haven't been developed yet from new technologies that they have.
So why are they doing this? Is this sort of a lesson about small companies versus giant companies? I mean, if these are pretty standard name brands, you know, these other small companies have a lot more at stake to make these things succeed. Is there a lesson there?
There isn't a lesson per se. You would, I think, immediately think this is another revenue stream for them. But it's an $82.6 billion company, and this brings in $3 billion a year, so it's not that much. I think it's the idea of bringing some of the brands like Febreze, Mr. Clean, Downy, these household names, into new markets. And so, or a different aisle in the grocery store, or just expanding its brand so the consumer thinks, oh, I never thought Febreze could be in residential air filters. I thought it was just that spray I used.
Okay, well, $3 billion at some point starts to sound like real money. Is this an industry-wide phenomenon, or is this, you know, peculiar to P&G?
It's definitely industry-wide. It's not just P&G. There are global licensing brand companies all over that are saying they're seeing this pick up. It's not necessarily across the board, but companies like Black & Decker, Perfetti, which is an Italian confectionery maker, are seeing this. Chiquita, which is well known for its bananas. So it is happening elsewhere, but what we're seeing with P&G is to such a large scale and such acceleration over the past couple of years that it really is making a mark. And what they're saying is $3 billion each over the last 3 years, but this year they're going to see it be much more because of the projects they have in the pipeline.
Does any of this tie into kind of the new types of household products that are available on the market, like more organic and, you know, sustainable or biodegradable diapers and things like that? I mean, Pampers are definitely not biodegradable as far as I can tell.
That's a great question. I'm not sure as much about organic. That could be something that they may want to do because they might find a smaller company that is a specialist in organic. One thing that they did release in January was the Scope Outlast Mini Brush, which we're seeing a lot more of. Those are these disposable toothbrushes. They're very small. A lot of the companies came out with them, and you throw them out after. Maybe you bring it to work, maybe you travel with it. So that was a new type of product that they came out, and they had partnered up with a smaller company for that, Aura Labs. But we are seeing some really small companies do things that P&G just didn't necessarily have time or effort for in its portfolio.
And Emily, we were just looking at a chart of P&G. Hasn't been exactly a big performer over the last couple of years, despite the fact that in 2011 there was kind of a presumption to defensive names. Is this helping their P&L? Is this helping their balance sheet? Does this matter to them?
I think it might be too small at the moment to say it's directly impacting it, but it definitely can help in the future. Right now there are such bigger things going on. They recently announced a measure to cut $10 billion and many jobs, and so that was the big call. That was about a month ago. So something like that, when you hear it, is going to do a lot more to its stock than something like this. But the idea that it is open to outsiders and it is open to external partners definitely widens the company a little bit more, and it broadens the scope. So I think if anything, it could help in the future rather than hurt them.
Sounds good.
Yeah, well, I mean, it sounds like the initiative that they need to take if they're not going to be able to develop those brands. The curious thing I find, P&G has been kind of good over the years about saying, you know, okay, these are like, you look at Folgers and you say, this is not a key product for us. Let's offload it. Let's sell it to Smuckers.
They're good with divesting, exactly. Yeah. And they recently got rid of Pringles. Kellogg bought that from P&G, and you know,
and a very controversial deal, of course,
yes,
because it
very
also
much
went
so.
to. It initially went to Diamond
right.
Nuts.
And then Diamond had many problems, as we know. CEO out, CFO out, restating 2 years of their financials.
So does that raise questions about P&G's execution? Are they?
I don't think that it really did. I think P&G, you know, they said from the start, if they're, we defend our decision with Diamond, we'll see how things go. Then when they saw how things go, not as expected, they moved on, and it was kind of this very clean break. I don't think there was a lot of bad press on P&G side. Instead, people were more focused on Diamond. But I think moving forward, you never know if one of the small companies that P&G is working with could be the next big thing. One of the last examples that we point to in the story is an undeveloped technology that a small 3-person company from a former P&G-er called Akebia Therapeutics, based in Cincinnati, where P&G is based. They licensed out a bunch of technologies, and they're developing drugs that are, one's going to launch in 2016, another one will treat visual impairment that diabetics face. So you never know. This is a small biotech company. Maybe this is something that will help P&G expand in the future.